Yeah.
Ladies and gentlemen, welcome to the SoFi Weekly. And today we have the great and powerful Tevis with us, the SoFi stockholder Roy, and myself. I'm just here to host, but hopefully you gentlemen are doing well today.
Yeah. New portfolio all-time high. Always a good week. And SoFi Weekly, always a good time too.
Your new portfolio is being driven mainly by SoFi going above 16, I assume, right? That's why your portfolio has hit new all-time high. I can't think of anything else.
Clearly nothing else running. Like, Hims, Hood. Palantir doesn't do me any good because stupid covered calls. So, but no, the rest of it's flying up pretty well. And SoFi holding and actually closing above 16 is pretty significant. So I thought that possibly it would be pinned and actually fall underneath 16, but that wasn't the case. So
yeah. Tevis, how's the portfolio?
Yeah, doing well, man. Tesla went on a run. Hims miners are doing really well. Bitcoin broke 100,000. Yeah.
Bitcoin did break 100,000, eh? Now it just needs to hold above 100,000 by end of year to make Tom Lee's prediction correct.
Was that his prediction that it'd hold over?
Yeah, it said well over 100,000 by end year.
So 101,000 then? Well over.
Yeah, there you go. There you go. That's well over.
Yeah.
It can go much higher, I think. I mean, not like much higher, but I think it can definitely go higher. Like the sell wall at 100 is broken, and now there's new sell walls at like 110, 115. So it's going to break through. Just give it time. I wouldn't be surprised if we see 115, 120 by the end of the year, honestly.
115 by end of year?
I wouldn't be surprised is all I'm saying.
Mm-hmm.
Yeah, that it could happen. I mean, it could be 85, it could be 115. I'd bet on the upside, but
Tom Lee is the Cathie Woods of 2024. I don't know what that means. I don't know if you're talking like Tesla era Cathie Wood, but yeah. Let's talk some SoFi. So, or maybe my cat's like literally inspecting the camera. Or maybe we can get into some Robinhood later. Me and Roy, Tevis, we got to tell you about that exciting day.
But he's like, I'm out of here. I'm not talking stupid hood with you guys. Forget it.
Is he a shareholder?
He is not. We tried. Multiple times. He didn't see it. He probably sees it now with the investing. I'm actually kind of curious on his thoughts on that. If he caught a little bit or not. But yeah, let's talk some SoFi first. There's some news this week too.
Yeah. So what's just happened recently? They just posted a press release. SoFi released a new product that is in partnership with Templum, a couple different private funds, but the one that I think is in everyone's mind is the SpaceX Pure Fund, where you're essentially getting access directly to SpaceX shares, and Templum and SoFi will make a fee for finding those shares for you. But that being said, it's only for accredited investors. What do you guys think about this new product that SoFi has put out?
It's amazing because everybody can be accredited, and there's not a limit, like 100 person that's just like really keeping it limited. So lots and lots of revenue. No, it's the opposite. It's nice. It's not. It gets some headline attention, but it's not a big deal.
No, you're good now, Tevis. I'm joking.
Yeah,
I'm joking.
You're looking good.
Yeah, you're good now. But Tevis, what did you think, my friend?
I mean, it's just a continuation on stuff that they've telegraphed very clearly, because at the end of January, they began offering alternative investments to allow members for mutual funds, money market funds. And that was the first time they introduced the ARK Venture Fund, along with private credit, along with real estate and pre-IPO companies. And then in October, they also had they expanded the robo-advisor out for alternative investments as well. So I'm not surprised, right? They're trying to attract more money into that ecosystem. And yeah, like it's just another thing, right? Like when they launched IPO markets for the first time, we didn't make too much of a big deal. It was just another offering to entice people to go onto the ecosystem. And I treat this exactly the same way.
Now, what do you think about the overall, I guess, market for accredited investors on SoFi? Because I'm a little bit mixed on this. It's the average demographic for SoFi is definitely larger than Robinhood's, I would assume, in terms of account size. But the brokerage size is, the brokerage side is looked at as more of a beginner-friendly platform.
It's not the way that I look at it. The way that I look at it is if I'm a lender who is servicing people with 750 plus FICOs and who have average salaries in the six figures, am I more likely to find people for my brokerage side of the business from that pool or not? And so I honestly think that Invest is not necessarily, it can be, but it's not, I'm not thinking of it as the first layer or the first entrance to that ecosystem. I'm thinking of it as like Invest is the product that is being cross-sold to these already high net worth people in SoFi's existing ecosystem.
Yeah, but I'm talking more about the accredited product.
Yeah, that's what I'm saying. Like people who have and this is an assumption, but my assumption is that people who generally have strong FICOs who are already in the ecosystem are already meeting the requirements for accreditation.
Yeah.
So they can now cross-sell onto the Invest platform through they can be the ones to leverage these platforms.
Right. I see what you're saying. Now, what did you guys think about more of a macro perspective going on to the chance of rate cuts after the jobs reports? I think it's at 85% now, a chance of a 25 basis point cut from the FedWatch tool. This is sort of what repelled SoFi back into positive numbers today because it was not looking good whenever the market actually opened. But we ended up closing above 16. Any thoughts?
I've got it here if you want to throw it up. So it's 86% of a chance of a rate cut here at the end of the year for the December Fed meeting here that's coming up. And you can just see how much it's moved here recently. It was 71% previously, last week 66%. So it's not 99%, not 100%, but it's looking likely. The jobs report that came out, of course, was a bigger push of that. It came in with more jobs, but also the unemployment rate went up. So it's kind of like a perfect scenario if you don't want things to fall apart, but you want there to be an impetus for the Fed to cut a little bit. And rate cuts are incredibly bullish for SoFi. Like the offering that they had, the partnership. That's I do agree with some of the comments. Is like that's the first step of many, many more. But like in and of itself, it's like that's fine. Rate cuts are more meaningful, and it's a matter of time before they come, but they can be delayed a long time. And of course, the more rate cuts occur, the more attractive some of those refinancing and lending products are going to be.
Yeah. Tevis, anything on the rate cuts?
Nothing particularly.
What else did you guys find very interesting this week?
The cash out essentially by Silver Lake. We can talk about that a little bit.
Sure.
Because somebody in my chat was saying that Rumi said somebody dumped 4 million shares at the open, which caused a mini crash. And I'm like, 4 million? You're short by a couple million there, friend. Silver Lake,
what, 26 million there, 27 million?
Yeah. Silver Lake, which was I think their third largest holder, something like that. They dumped 31 million shares of SoFi over the past 3 days alone this week, which is a big reason why we got a drawdown.
Crazy.
Mm-hmm.
But what are your guys' overall thoughts here?
This happens. It's on the institutional level. Like some are going to cash out, and they were just they're waiting and they see something more attractive, it's run up a lot. SoFi has, and individuals like we've seen that on the retail side. A lot of people were sellers at 7, 8, 9, $10. It doesn't mean that SoFi can't continue to go up. In fact, I think it's going to have a very, very good year from now through the end of 2025. But yeah, it shouldn't be shocking when people want to take profits along the way after that really fast run up.
Yeah, I mean, I'm not sure about Silver Lake specifically to comment like, something catered to them, but I know a lot of institutions play in that sweet spot, right? Like I've dealt with like in my job, I've dealt with growth equity and private equity that specialize in certain portions of the business life cycle where they'll jump in only with series A or seed level companies and they'll always jump out at like series C or series D. And like that's their playbook. That's what they've been doing for decades and decades. And so you're going to come into many cases where these institutions, maybe not as big as Silver Lake, but institutions who have been investing in SoFi in 2017, 2018, when the company was private, where now they're feeling like, okay, well, there's better opportunities in that sweet spot for them because that's like their bread and butter of what they do. And so they want to reallocate that capital elsewhere. And like, that's just something that happens. It's very normal.
Yeah. No, I completely agree. It's like SoftBank, it's just them switching their investments from public funds to probably trying to get into other private equity funds or private equity and hopefully trying to transition those over into IPOs again, especially if capital markets are heating up. They might want to get into companies that are pre-IPO. Okay, so yeah, what was the other? There was a
Wire transfer.
Yeah, that's another good one. SoFi ended up showing off that they now enabled wire transfer for people, free inbound, $30 outbound, very standard. And this is essentially going to be powered by Galileo, if I assume correctly. They recently just put out a product for wire transfer probably about a month and a half ago. And now SoFi is saying that it's available on their own company officially this week. What, any thoughts on that, Roy? You think this makes a large difference?
So it's one of these, like if it was just in and of itself, it's like, oh, wire transfers, nice. No big deal. Let's move on. I think that this is one of those essential services for business accounts. And so they're just laying the groundwork for that. Probably next year, we'll have to see. I know once they announce business, as far as like what Steve has in mind, he'll be very, very happy. He might even come on the SoFi Weekly. So, but I owned and operated a business back in Nebraska and did wire transfers probably like 15 to 20 per year. And it was through Wells Fargo. And it was a terrible experience because I had to go physically into the Wells Fargo, which was like 20 minutes away from where we lived. I would have to have an appointment beforehand. They would always be running late. And then I would sometimes get somebody that was pretty efficient at their job, and they were nice, and it worked out well. Sometimes I get somebody that's brand new, and it would take twice as long. And sometimes I get the person that wants to double check everything across the portfolio and cross sell you a bunch of products. And it ends up taking like my entire, not my entire day, but like 4 hours, honestly, for a stupid wire transfer. It was the most annoying thing. Finally, like during COVID, I think it was just before COVID, they allowed wire transfers, maybe a year or two before, on a small monetary amount that you could do just online by yourself. The fees were still high, and it wasn't the easiest thing to do. I don't have to do that anymore. I'm not, actively doing. The business is dead. It's gone by the end of the year. I'm done with it. Had a good run, over a decade. But as a business owner, like having access to wire transfers is necessary. And so if they want to launch business accounts, they should have services like this. I imagine it's not the first thing that they'll announce or the last thing that they'll announce before business accounts actually come. So for me, I thought it was like really, really exciting because I know the pain point of going through 2, 3, 4 hour wire transfers. It's stupid. So yeah, this is good.
What's so funny is there's a couple features that banks, if they do not, like for certain members, not for every member, but there's these certain features that members will look for And if another bank offers it that this new bank that you're trying to switch to doesn't, you cannot put all of your assets with that new bank because you require this new feature.
Yeah.
And I'm even struggling this. Tevis probably, well, maybe he doesn't. I don't know. I'll talk with him afterwards. But there's a feature that I am looking for on the bank that I'm trying to deal with, and they just don't offer it. And they have everything, every single thing that they do better than another bank that I deal with, except they're missing one feature. And so I cannot be with them full time because they are just simply missing this tiny thing. These things do stack up. Okay. So wire transfers for a percentage of individuals were stopping people from transferring over to SoFi. Another check mark on the box. Hopefully they continue to ramp those up and continue to put out new products as they get to those achievements as well. Tevis, what's the next thing that SoFi needs to get that is simple, that potentially would actually gain a lot of people's trust or requirements to switch over to SoFi full-time?
Yeah. So first and foremost, I just want to say that a lot of these product offerings, they're not groundbreaking as a standalone. Like wire transfers has been around for a while, but it's similar to Zelle, right? Like we were talking about Zelle for SoFi for years. They're just the small bricks that eventually, when you look back over the course of a year or 3 years, you need in order to be able to build up to becoming a legitimate player in the space. So in that sense, it's bullish as a standalone, even though it's not like the sexiest launch that they could have ever done. In terms of what other, if we're talking strictly product offerings, one thing that I had in my 2024 wish list, which is probably not going to happen, but maybe for 2025, was a tax product. I would love to see them start to capture more market share from the QuickBooks of the world, from the TurboTaxes of the world, because it fits so well into their ecosystem, especially now that, they are moving more stuff into Galileo, especially now that they're doing more stuff that are AI based in terms of like, hey, suggestive, based analytics that's more, helpful to users. And so I do think, especially, and considering that we're going to be going into tax time over the next several months, like it would be a nice time for them to launch it. But I don't know if that's their plan, right? We actually, and we can pivot on to that in just a bit, because Chris Lapointe did mention on that fireside that towards the end of the Q&A, he was asked about SMB, and he said, hey, look, we're not a principal at SMB. We're basically referring everything out. And it's the same with insurance.
Yeah.
And he basically said, we're not, allocating marketing spend to that right now, but that's a potential avenue that we can like go down. So I do think that there is these things that are on the horizon, SMB, insurance, a tax product, like stuff that we've been talking about for a while that will really help bridge the gap in terms of that closed loop ecosystem for a one-stop shop.
I genuinely have, well, I mean, probably a couple of people, but I'm thinking about a particular person that uses Wealthsimple here in Canada, which is a, similar bank product with multiple different products, but they also have a tax solution.
Yeah.
And they specifically use more Wealthsimple, so then they don't have to import other information over, because it already supplies that information because they have it in the ecosystem. So the tax product not only could potentially be its own revenue stream from potentially charging or charging tips or something like this, or additional services that might require like hands-on support that could charge extra. But what I also think would be interesting is that people might have a deeper share of wallet if they actually have a tax product, because they'll say, hey, you know what? I do want to spend more with debit cards or credit cards or something like this, so that my expenses are more easily placed onto, SoFi tax.
Yeah.
Yeah, it could be.
I think Cash App has a tax product as well that, they've been able to put that out before SoFi has.
It doesn't seem like a huge lift either, right? Like if you're thinking about staying within the ecosystem, then the only thing you really have to add is like importing documents, and then it's all just like, formatting, because all you're spitting out is like just a few documents that you submit to the, well, I don't know how it works in the States, but it's just a couple of documents, right? unless you're doing like a direct integration where you're the one, like Sofi is the one that's submitting the documents on behalf of the user, which is a little bit more difficult. But like we have tax products here in Canada where, like for example, QuickBooks, like I have a self-employed QuickBooks for small businesses, and you literally just link it up with your bank, and it logs all your transactions, and you can label them. And at the end of the year, it'll just put everything in
into
terms
the
of
buckets.
like like a P&L, like a tax report or whatever, and you just export that and you just upload it into the government system, and that's it pretty much. So I don't know how intricate it needs to be, but what I'm trying to say is they can start small with it with a very low lift and then eventually build from there.
Congratulations, Osiris. Cool. Love it. Well, simple charging $10 a month to sell covered calls is crazy. I don't think that that's a thing. Is that a thing? I don't think that is.
No, I'm not getting charged $10 a month.
No. I think you have assets under management less than 100,000. That's what I think that is. Because I don't think you get anyway. What's it called? So what's next? Do we want to talk a little hood? The little hood event?
UBS conference first.
Oh, that was this week?
Yes, Wednesday.
That feels like a long time ago.
I mean, like it was frustrating because
Tuesday.
you and I are there at
Tuesday, yeah.
Investor Day for Robinhood, and then they have the UBS Fireside Conference, and like PayPal had a great one. The SoFi was very good too, and it just is like you can't be in three places at once unless you're Dan Dolev. If you're Dan Dolev,
you had went down a day early, but the UBS conference was Tuesday. It was the day before. I live streamed it.
I didn't realize you were live streaming it. I told my chat like live. I was like, "Oh yeah, Tanner and Roy are down in New York," so I figured I'd just live stream. And then my chat was like, "Tanner's live streaming it." I was like, "What the heck?" So I think
that's what I figured is that because Roy went down, you did an emergency bootleg, but I wasn't going down a day early. But yeah happens. But yeah, no, it was a good thing. Anything that you guys picked up from that?
From the SoFi, like the one that I thought was really interesting was them asking Chris Lapointe about the tech platform. Like if it was just basically, I can't remember exactly how it was worded, but something like, was it basically macro driven that caused demand to fall off? And Marqeta, which is a banking as a service competitor, they blamed the macro. And I myself, I'm very focused on like leadership and culture. And one thing that weaker companies tend to do is completely blame circumstance and competitors and different things, and they almost never put the blame on themselves. And then so like if a softball like that is ever offered up, even companies that are not that weak, they'll grab it. They'll be like, "Oh yeah, absolutely." But instead, Chris Lapointe comes in and he's like, "No, absolutely not. The pipeline is strong." And he just reiterated a lot of things that they said earlier about the tech platform as well. So didn't blame, circumstance. They're just like, hey, things are good. They're going the way that we want them to. And we don't think that was the cause or that was the reason for concern at this point. So I really liked that answer. I'd have to go back and see the exact quote, but that was my favorite part.
Right. Just trying to find it here because I had a whole list of notes, but I'm lost in the sauce here. Anything from you, Tevis?
No, I mean, I made a full video recap on this. Basically, yeah, the tech platform means that we haven't lost any deals, which, was one thing. A lot of the vibe that I got was around monetization, which was interesting. They've sort of been skirting around this topic, but it seemed as though Chris Lapointe was harping on it a little bit more over this latest fireside, saying that, hey, we basically have two levers. One is how big the size of the user base is, and then the second is, what share of their wallets are we taking, essentially. And he threw out that $81 annualized spend per product, and how they're actively internally, measuring that KPI to increase it, which is cool, because usually I hear those conversations around like, PayPal or Cash App or some of these other competitors and not really SoFi. So I like that they're talking about that a little bit more because they are getting into these large amounts of user bases now.
I do have my notes here. It was pretty interesting, some of the stuff that they said. So here were a couple of the notes that I thought were quite interesting. And as I read them off, I want your guys' takes. They said less than 2% of the home loans that were taken out from SoFi members were taken out by SoFi, or like with SoFi. Only 2%.
Yeah.
What do you guys think about that? Is that a bullish sign, or is that sort of a little bit negative?
I mean, so it can cut both ways, right? Because on one side you can say, okay, only 2%, then obviously SoFi doesn't have good cross-selling, and then you can say 2% gives them ample runway to cross-sell. But the thing that I sort of revert back to is like he wouldn't have even mentioned that stat if he wasn't like trying to paint it, if they weren't
A
actively
positive light?
working to increase it, because
That's
like
a fair point.
he was the one that brought up that 2%. Like he didn't have to.
Yeah. No, that's a great point. That like if it came from a point of weakness, they just wouldn't have said anything.
Yeah, it really showcases the upside. This is a newer product for them too, through the buyout, the acquisition rather. And they've not had an environment yet that was favorable since that time. I think that'll change at some point here in the next year to two. I don't think that demand's going to be a problem. I would be very surprised if demand's a problem. So,
Tevis, stop typing. All right. They said we're still on track to do 50-50 split of tech and financial services versus lending. I thought that was interesting because I think that lending is going to do very well this quarter. So interested there. However, a large percentage of the lending doing well can actually be placed into financial services, right? Because of the loan platform business. That is lending, but the revenue is placed into financial services. So who knows? He even said really good growth in non-interest income and spending in Q4 is still looking very good. Any thoughts there, like just in terms of strength of the consumer?
I've not seen many indications, SoFi or otherwise, that the consumer is weak. We had the Black Friday, Cyber Monday. Adobe Analytics published that. Of course, we saw what Stripe did. PayPal published their numbers, Shopify as well, Amazon. And it's really good. Like, there are some concerns, that people have as far as credit cards, and the debt level that people have there. There's a lot more that they can do through buy now, pay later, and I won't shift the conversation to that. But no, like for right now, I think the consumer has plenty of room to run. We'll have to see how much that is in the new year, or it could just be that sometimes in these weekends they shift spending forward to the Black Friday, Cyber Monday week, the Cyber 5, and then they spend a little bit less. So we'll have to see how the whole season turns out. But yeah, there's no signs of the consumer weakening or taking a breath. The American public is insatiable.
Yeah. The tech platform is holding up strong RFPs, and we haven't lost any deals. Top 5 US bank was a deal that was on the table. Haven't lost any of them. Very interesting. Galileo is regulated by the Federal Reserve through our holding company. So we are very different than the other tech companies.
Just hold on that I haven't lost any deals part. Because like that was, I retweeted that, when he said it and all that. But like, then I went back. He said we're working with a top 5 US bank, or we're in a POC with a top 5 US bank in February of 2024. It was Crystal Point that said it. This was when it was one of the firesides, I think. I can't remember which one, but anyways, and I'm like, okay, well, you haven't lost it yet. Like, where is it then? Where are the accounts, man?
I honestly think that the time between February and November, or February and October, there was just zero movement until rates started to get cut. Like, I think they were just on pause for banks to see where rates were going to go.
I mean, I don't know. I think it would also be like misleading to some degree because, in software sales, sometimes when they say no, they're like, hey, let's revisit this when I have budget in a year, or let's revisit this, at a later date. And then they keep the deal open just to make their pipeline, like their sales pipeline, look a little bit better. If it's one of those situations, then I'd be kind of sad. Because it's like you've already gotten the no, you're just like, not logging it as such.
Sure. Sorry, Roy, you were going to say something?
No.
Okay. Let's see here. We're still nowhere close to 8% life alone losses. Very good. 30 to 35% of new products are from existing members, and our marketing spend is getting more efficient over time. We're investing more into brand, which is making our marketing spend even more efficient. And we're going to continue to pay a high customer acquisition cost to ensure that we have the best customers. What do you guys think about that? The overall sales and marketing strategy that Sofi has.
It sounded like their CAC was kind of high because he sort of deflected that question. So basically,
It is high.
The announcer asked them, or the commentator, whatever you want to call it, the interviewer, what are you doing about CAC? Is CAC high? And his answer was something to the degree of, our CAC is what it needs to be for us to get 30% EBITDA margins. And I was like, okay, well, you didn't say anything about like, hey, we want to lower it, or hey, this is what our peers have, or so on and so forth. He's like, hey, we need this CAC basically to get these margins, and we have been hitting these margins, so we're happy with it as a result. I'm like, okay.
I think there's a weird thing that Sofi is going for versus other like companies. So Cash App is kind of saying, hey, come on over. We'll take anyone and everyone. PayPal's doing this. All those companies are essentially doing this. But Sofi, so much of the money that they actually make is from credit. So they don't want anyone and everyone. They want a very particular audience. It's like the spend that Amex has. Amex wants a specific user base, not an any one user base. So they're saying, hey, you know what? Why don't we go to these platforms where we're advertising on and be a lot more specific on the type of audience that we look for, spend a lot more there, but then also like test the user base once they get there and say, hey, we're going to not only pay you $40 whenever you get in, but an additional $250 if you do direct deposit. So ensuring the customer lifetime value is essentially what they're trying to do by paying a very high customer acquisition cost. You're muted, Roy.
With what they have as far as their offerings, their products, if it's enough and a nice enough platform, the high customer acquisition cost is not like amazing for the first year that you have that customer, because it can take a year or two or sometimes 3 for that payback moment, depending on ARPU. But if they're sticky as a result of this, and they're also high net worth, which means you'll actually probably get a lot more opportunity to service them as far as personal loans or what have you. That's very good. Like as long as it's sticky. And that's one of the things to really keep an eye on. And I'm thankful that I think this is 2 quarters now that we've had this, where Sofi will actually report the members that are leaving the platform. And so we can keep tabs on, because they're growing rapidly, but if the back door was just as wide, you'd just be spinning your wheels. And that's not the case, thankfully. So, but that's something to keep an eye on.
That's interesting too, because if you track it, they removed members in Q1. There was they added net members higher than the actual, they added total members higher than the net add. Then in Q2 they did not, and then in Q3 they did again. Yeah. So it's almost like they're churning on a semi-annual basis or something.
They should probably do the same every single quarter, to be honest. But it's nice to have that to track. And I'd forgotten that Q2 was that aberration. So, but no, more information as an investor is a good thing, and knowing that you're acquiring customers is great, but also knowing the attrition rate, it's good. It's important. Loan
platform business, and let's talk about Lantern Marketplace in general. we saw the need to create a marketplace for every single financial services product. For the longest time, once we got the bank charter, we wanted to grow the balance sheet. So we really haven't had an interest in it, and the need for the product slowed down greatly. But now, completely different. They are turning and going headstrong into the loan platform business. And now we can officially unlock all the originations we want from members. What do you guys think about the LPB? And then we'll go back to the marketplace for every single financial services product, because I think that this is a huge, like, I think I'll just say really quickly my thoughts. I think that means that this isn't just for personal loans, but they're actually going to create a loan platform business for home loans, for student loans, but mainly home loans. This is the one that I think has by far the largest total addressable market, and the one that has, the largest debt markets for that product specifically.
I think that this is just the first leg of what they're offering. This is kind of unrelated, but a little bit related. Top apps in finance category. And Credit Karma is always high, and I've wondered why, and it spiked up to number one. And I think part of that was like a lawsuit type thing over Black Friday, Cyber Monday for a little while. I didn't realize fully what Credit Karma did. I thought it was just Relay, and that was it. And, that's a big part of Credit Karma. But they basically use those credit scores to be able to use this as a platform to offer you all kind of different, like insurance, lending products, those sort of things.
Personal loans, credit cards.
Exactly. I really think that that's the direction that this platform can go, is that it's just one little aspect. And so like all of it just really works well together as a flywheel to bring customers in. They're like, oh yeah, I'm just here for the credit score. And all of a sudden it's like, hey, personal loan, it's personalized and made just for you because we know your score. These personal lending products, insurance, maybe potentially down the line. And so it's, I don't know. It'll be interesting to see the direction that they have that go. Of course, the initial platform is not that yet, but it may be built out to that point for the individual consumer at some point. But yeah, this is a company that has a lot of tailwinds coming into this year.
Oh, okay. Dude, it's so funny listening to Tevis. He just laughs nonstop. Okay, Tevis. Yeah. We saw the need to create a marketplace for every single financial services product. Thoughts?
Yeah, I mean, they're just going after more market share, right? Like the reason why the loan platform business is so good is because of what they've reiterated multiple times. It's low effort. They get a fee based. It's not putting their own capital at risk. It's what's the term that they use? The capital light. I had it written down somewhere. My point is, it's like it's a easy lift for them to be able to do that.
Capital
and
light.
For them, yeah. But they had like a whole expression like capital light, efficient, something like that. I have it on a tweet here. So it's easy for them to be able to do it because, yeah, here it is. So he says, quote,
capital light revenue.
We decline 70 to 80% of applicants. We've found a way to meet both the demand from a consumer perspective as well as capital markets perspective. Like they don't need capital markets because they can originate on them by themselves because they have all this deposits, and they don't need consumers because they say, hey, we want to only accept, 700 plus FICOs that meet our criteria. And so they're in that sweet spot of being the best. But now they can meet both of these aspects. The quote continues, we're able to originate on behalf of others. I think it's going to be a key driver of growth. Demand from capital markets has never been as strong. So it's a no-brainer, right? And like creating a market for everything is a very ambitious task, I would say. It's going to start piecemeal and eventually going to scale from there. But for them to be able to get to where they want to go, they won't be able to just do that by, what they're doing right now. They have to create these product offerings to leverage their competitive advantage. And it seems as though a lot of partners are willing to take them up on it, whether it's, whoever we got recently. Was it BlackRock recently?
Fortress.
And then they also had one at the beginning of the year, right? They had one in March or April, I believe, with PGIM, I believe. So my point is that that's going to scale, and that's going to reflect to the bottom line. And it's something that people were not expecting at the beginning of this year, but it's going to be a key contributor in 2026 and beyond. And it's something that has changed how the market is valuing them, how the market sees them. And to that degree, it's a stepping stone for them to get to where they want to go. It's necessary.
What I also think is interesting, like if we're comparing these financial service marketplaces between Credit Karma and SoFi, Credit Karma has to bring in every single member, right? And they do this with a product like Relay.
Mm-hmm.
SoFi can do a similar thing, but also they can, like, their advantage is Galileo, right? So if you notice through Lantern's marketplace, a lot of the products that they're offering are customers of Galileo. Ladies and gentlemen, please welcome the great and powerful Stephen Fiorillo.
I heard that Tanner was being boring, so you needed a fourth.
Or Tanner was being boring. Listen, I was just about to compliment you. I was about to say you looked like Superman whenever we met you. This dude is huge, okay? His shoulders, so we had to get a table for 5 to sit 4 people because his shoulders were taking up the lengths of 3 chairs because he's that, he hasn't been working out for years. It's just,
I haven't touched the weight in 4 years. I'm not freaking jacked. I don't know why you guys think I'm big.
This is the biggest dude I've ever met in my life. Here, we'll
stop it.
I
can
swear
show you a picture of what I used to look like if you really want.
That table, whenever we went, better have been bolted down to the ground if they had, and maybe that wouldn't even have stopped. The flooring would have had to been checked, because if his steak was overcooked and it was not red to his desire, it would have been flipped. This man is strong.
Okay.
I mean, you're not wrong. Like, Steve is just, absolutely jacked. So
how do I share this picture?
I'm trying to find a picture as well here. I'm dying to find this picture that I made.
Oh, I got it. Here, this is what I used to look like.
Watch him log out.
Oh, buddy, this is killing me. Look at his chest.
So, like, I am not freaking jacked. I used to be.
Look at his arm, dude.
Yeah, that was back in the day.
That's a leg for most people.
Back whenever you used to train like Lou Ferrigno, what are you talking about?
Like, I seriously haven't worked out in like 4 years.
But did you have a good time?
Yeah, it was great. Tevis should have came down.
We told him to.
Yeah.
I mean, this guy's traveling the world, going to Japan and stuff. Like, I don't know why he couldn't come to New York. It's not that far apart.
I'm not going to come to New York just to have a lunch. Like, as fun as it sounds, if I was at the conference, then I would have come to New York. But otherwise,
who cares about the conference?
No, it's an excuse to go. I'm not just going to come for a lunch. And was it exhausting, Tanner, flying in and out the same day?
It was I was up for 23 hours. But my flight, because it was a snowstorm in Toronto, ended up getting delayed about 2.5 hours or so. So that really was the thing. It was exhausting, but honestly, I'd do it again. It was a lot of fun. Let's just take a look here really quick. So this was the crew. Roy is having a great time. I'm having a good time. Hold on a sec. He's having a good time. This dude literally looks like Superman. What is the collar is popped? Like, he didn't do this. This was just natural. It cannot fold down when you have triceps like this. When you have trapeziuses the size that Steve does, you cannot put your collar down.
Steve, you kind of look like Anthony Noto without the glasses, hey?
He does.
You know why I look angry? Because I was chewing a piece of steak and they made me take a freaking picture and put my fork down.
And then look at this kid beside him. He's so happy. And then you have this absolute supermodel of a Mr. Olympia right here.
My favorite part, though, Amit ordered a medium well steak, and Steve was not impressed. None of us were impressed. But then Amit, actually beforehand, he orders a Shirley Temple, like the most manly drink. And I'm like, you know what? It's been like 10 years since I've had one of those. That sounds great. I'm going to get that too. So
And I'm sure it was delicious.
Oh, it's amazing. Yeah. It's the best Shirley Temple I've had in a decade.
I don't know why everybody's getting on Amit for how he ordered his steak. As long as you enjoy it, it doesn't matter.
It's just all good fun. I don't care. You can have whatever
you get
you
it well
want.
done.
No, medium well. Medium well's medium rare is the way to do it, but hey, medium well, you do you. But yeah, the Shirley Temple was like It
was a good spot. I thought that Steve picked it well. He said it was 5
Did you
minutes
guys
away
like
from
the restaurant?
What?
Oh yeah, it was amazing.
You guys
I'm
like the
glad that it was
restaurant?
5 minutes away from the New York Stock Exchange.
Listen, it was. You guys walked the wrong direction. I don't know.
It was for Steve. Steve can cover a 25-minute walk in 5 minutes.
It was
Apparently,
3 avenues away. It wasn't that far.
Yeah, I mean, we can't walk through buildings, so we had to go around.
Steve can leap over buildings in a single bound. So,
oh my god,
Steve is the juggernaut, bitch, and he just jumps over the.
You guys
look like the juggernaut with the helmet on right now.
About Steve jokes instead of Roy can start a fire with water.
So Steve, on SoFi, like we were talking about their UBS conference on Tuesday. Apparently, I had the date wrong. Traveling messes you up like that. Anything stand out for you for that, or like did you see the wire transfer news and any thoughts on that?
I haven't seen it. I've been busy.
So my thoughts on the wire transfer, and I thought that you'd particularly like that, is individuals do use wire transfer, but I think this is signaling like, hey, they're launching the business platform and they are just adding these products on, so they're ready to go for the business customers in the near future. So, the product itself was okay, but yeah.
That's good. I mean, I'm happy about that. I would, how I feel. I want more business activity. I'm still not understanding why they're outsourcing, but that's a different conversation.
All right. What's next up on the SoFi conversation? Did you see the UBS conference? That's what we were covering before, Steve.
No, I'm going to read the transcript over the weekend.
Got you. What's your current expectations for SoFi, just so we can all get caught up?
Well, it better not go over 1750 next week or I have a serious problem.
How serious of a problem?
Pretty freaking serious.
Do you want to know what the track record of people saying they're covered calls on SoFi is? I don't think we've had one that hasn't been exercised on. Is that true? It's really just been Steve, or it's just been Tevis that has been public. It's about voicing them. It's not about having them. It's about voicing them out on this SoFi Weekly. It seems to bring institutional money in, so you might have doomed yourself.
Well, yeah, I'll be vocal about it. I am in a predicament with Palantir cover calls, and I do not want to utilize a lot of money out of my own pocket to buy them back. So I have made a decision where I'm going down with the ship and I'm writing call options against my Nvidia shares and my SoFi shares starting this week. I already did. And I'm going to build some capital from that. And 2 or 3 weeks when my PayPal shares get called away, I will be buying back a lot of Palantir covered calls.
Yeah.
Well, let me restate that. I'm not buying them back. I'm actually going to re-roll them out further and use my capital to pay the difference. But I sold a lot of cover calls on SoFi at 1750 for next week, so it better not go past it.
I mean, just roll it.
Oh, yeah, just roll it. Cool. That's how I got a problem with Palantir. Just roll it. Yeah. Because nobody expected Palantir to go up to 77.5.
No, it's insane. I mean,
wait, 77?
Yeah,
it's at 77.5 today.
They announced 3 partnerships today. 3. Like they don't have a chill mode.
Dude, I saw somebody post on X that Palantir is 100x from here, and then just everybody started shitting on him. They're like, "Oh yeah, $70 trillion company, go fuck yourself."
Dude, Palantir's going to 225 next year. Don't worry. Like, think about this. Today, it added $4.50 per share during regular trading hours. Every dollar, Amit was saying, is 2.2 billion in market cap. So they added 4.5 times the amount of revenue they generate in a year worth of market cap today, without adding a single dollar of revenue. Think about that.
But you're talking about this like you're happy about it. Like I'm gonna.
I am not fucking happy about it. I'll tell you that right now.
They need to chill.
This needs to chill.
Yeah, go back to $60. Great, that's nice. Please.
I needed to go lower, but it doesn't matter.
It does.
All you Palantir guys should take all your gains and throw it into Nvidia. It might be the best trade of all time.
I'm not going to disagree with you with this because I just wrote an article on Nvidia, and I think it is going to be the first $5 trillion company. When I ran the metrics and the numbers, there is no doubt in my mind that they are going to generate more profit than Apple next year.
Or the first $10 trillion company.
You got to get to 5 first, sir.
Yeah.
So you think it's going to double from here, or over double from here until the end of next year?
Well, it wouldn't be over double. Is there 3.5 trillion?
Wait, what are you saying? Sorry, Tevis?
Didn't you say 225?
I was joking about Palantir.
Oh, okay.
Yeah,
I don't know anymore, man. I don't know anymore.
Listen, I keep raising my price target.
But you know what? He's not joking about 150, which is scary. And like the whole market is not going into meme territory, but there's a single name that is going into meme territory. Like,
let's rephrase that. How about it is in meme territory?
No, I know, but you guys aren't selling. So you're
that's the thing.
You're going into greater fool theory, and you think that someone else is going to pay more.
I was on Amit's market close, and he asked the chat, nobody is selling Palantir here. And that's what's crazy. Like, all of us have averages of like 8 to 16 bucks, and nobody's selling.
Steve, that's false. They're just not admitting to selling Palantir because you guys are a freaking cult.
Well, it's going up, so somebody's buying. But yeah, no, it is. It's. But I mean, on one hand, like they've outrun everything that I expected that they could possibly do. I was a crazy guy when I was $8 that I said, hey, it could go to 40 within 2 years, and I think SoFi was at like 7 something at that point, and I just got laughed at. And now it looks like I was just ridiculously bearish because that 2-year point is in like March. And if I was saying, oh yeah, Palantir is going to $40, like I'm the bear. But there's a ridiculous amount of like very, very good news for Palantir that came out this week and also last week as well. It's not, there's a lot of speculation, but it's not pure baseless speculation that is not grounded in any kind of reality at all. I don't know what the fair value is. It's outstripped that. It's beyond that. I'm happy to take some off the table in January. I will preserve some of my covered calls, but a third of them, those are going to be gone, and I'm fine with that as long as we're over a certain amount. And we're like way over where I'd be happy selling. But this is a company I want to be in for the next decade. I know the direction that they're heading. It may have a couple of years of dead money, but no, it's the hype is not fully justified, but a lot of the hype is. But yeah, I'll pull it off and buy some other things. Nvidia is one of those too. Tanner, to your credit, if it continues to consolidate, I haven't tracked it this week because I've been busy, but I don't know. I'll have to look at that. Amazon's probably the way I'm going though. I think I'm just going to throw that in Amazon. All-time high, yeah, but in a bull market, like buying quality companies that are an all-time high, not a ridiculous all-time high like Palantir, but like Amazon, that's not a bad place to be.
Roy, I can't believe I'm going to say this to you, but may I try to change your mind on that?
Yeah.
I'm going to show you one statistic, and Tanner's going to freak out because I can't believe I'm agreeing with him. on this because I came around on Nvidia. I was an Nvidia bear for quite a while, and I have fully come full circle on this because the metrics changed, which made me change my investment thesis. I mean, there's no ifs, ands, or buts about it. So there's one metric I just want you to look at.
Steve
and I am
I
an
had a
Amazon
conversation.
shareholder.
Steve and I had a conversation on Nvidia, like what, $300 a share, and now
it's probably 2 years ago we had that conversation.
Now it's at $1,420 a share, adjusted for the split.
Yeah. So can you let me share? Thank you. So these are the numbers as of yesterday. So when you look at Amazon, Amazon's trading at 43 times this year's earnings and just over 29 times 2026 earnings. And everybody says you pay for growth, right? So Amazon has 47% earnings estimated growth from the analyst community over the next 2 years. Nvidia has 89% expected growth over the next 2 years and trades at 26 times 2026 earnings. And the news just came out about Meta building a $10 billion data center in Louisiana, and CapEx is not slowing down. When you actually look at the CapEx from only Microsoft, Amazon, Meta, and Alphabet, $199 billion in the trailing 12 months. Every company is spending more on CapEx quarter over quarter or year over year, and the highest they have in 5 or 6 quarters. Like,
have you published this yet, Steve? Have you published this? Have you published this?
Yeah, this is on Seeking Alpha.
Okay.
It came out today. And then Nvidia's growth rate is insanity. Like,
and you know what companies' growth rates are not insanity? Palantir's.
Anyway, Nvidia, I've never seen a company grow like this over the past 2 years and add this much profit in this short a period of time. And next year, everything is on track for this number to be about $25 to $35 billion more on net income.
Yeah. So I mean, I wouldn't hate.
Problem.
Go ahead, Kevin.
Here's the problem that I have with Nvidia is that, like, yes, I'm not doubting the math. The math, like, sounds good. I'm just skeptical on, and this is because I'm not, like, in Nvidia, so I don't know. So it's like skepticism, not because I'm, like, being a hater, just because I haven't read into it. Can they really keep up that 89% growth? Because a lot of these companies, you're buying based on growth. Like, my thing is that the first quarter that Palantir puts up a 29% growth instead of a 31 or 32% growth. Like, the first quarter starts decelerating again or plateaus. Like, the stock is going to get hit disproportionately and it's going to go back down to, 55 or whatever, because so many people are buying on the promise that growth is going to keep accelerating. But growth, it might for several years even, but it can't keep accelerating forever. And
that is not what's being priced in for Nvidia, though.
So think about this, Tavis.
Okay.
Nvidia beat on the top and bottom line. They beat by like $2.5 billion on revenue and either 4 or 6 cents on EPS, and it went down on a double beat and a guidance raise. This is so mispriced right now. And I can't believe I'm saying that, because I look for value. There's so much value to be unlocked in this, especially after Amazon came out today and said that there basically is no substitute, and AMD is not producing an AI chip that can compare to NVIDIA's.
And by the way, 89% is not expecting accelerated growth. It's not like Palantir.
That's over 2 years.
Yeah, it is slower than what they're currently putting up. Like, they are expecting a revenue slowdown, not by a lot, but that is slower than what they've previously done.
But they are expecting to maintain their margins at over 74% for gross margin. And most likely, they're going to keep over 50% net income margin. Their net income right now in the TTM is 54.5% or 55.5%. It's one of the two. The fact that they are a hardware company with those types of margins and this amount of growth is insane. And they're buying back a ton of shares right now. And they're going to probably accelerate that too which will also help EPS.
Okay, on the share buyback, it's not a ton of shares, correct? It's just the amount of money that they're spending. Because
all right, the amount of money. I mean, they spent 12 billion or so, Tanner, right, last quarter.
Yeah.
So they've authorized. Do you remember what they've authorized? I thought it was like 60 billion or something like that to buybacks.
I'll have to check. Here,
It was a pretty big number, and if they keep generating more profit, they don't really pay a dividend. So that could be meaningful from an EPS perspective. Is every share they take off the market, it's just more EPS expansion.
Yeah, I would be curious as far as, I know that they have a bit of stock-based compensation. Is that enough to offset the SBC? I don't think that it is. Correct me if I'm wrong.
I'll tell you right now what they're issuing.
Yeah, but honestly, guys, I think that you're like nickel and diming the story here.
That's
I wouldn't
fair.
worry about the size of their dividend. I wouldn't worry about the size of their buybacks. You know,
Yeah, I
no,
mean,
you're talking about an entire technological shift here. It's like we do not need to, and that's exactly what people are doing on Palantir too. It's like they're not nickel and diming the small stuff. The problem is I find that there's a big difference between a 30% growth rate and a 94% growth rate.
Is it growing 94% in 1 year?
Sorry?
It's growing 94% in 1 year?
Year over year, yeah, Nvidia, yeah.
That's
On the top line.
That's
yeah.
And they're expected to hold that up at least for a good percentage. This is what I mean. Like, and 94% is like decently slow compared to what they were doing last year.
Well,
like,
let's go one further, Tanner. Their actual growth rate for this year is expected to be 127% year over year for revenue. And next year, they're expected to grow by 50% revenue. Think about that. 50% growth at a 54% profit margin.
Yeah, no, that sounds reasonable. If analysts are expecting, they'll probably beat that. But that was my question: is if Tanner's number was next year's, like if analysts were saying 90% growth next year, I would agree with Tevis. I'd be like, there's a problem. I don't see it. Like the law of large numbers is starting to catch up. 50%, yeah, I can see that. And
it is decelerating, but it's still high, like super high growth rates.
Yeah, and so don't knock the 30% of Palantir, because forward growth I would expect is probably be closer to 35%. 50% is a lot better, yes, but 35% is very good too. So, but yeah,
I gave you bad numbers. I gave you the EPS by accident when I said 127. It's really 111% revenue growth.
And it's amazing.
And then 51% next year, and then 20% the following year. But look at the number of analysts: 54, 59, and 41. It's not like this is 2 or 3 analysts.
Oh yeah.
And by the way, of the analyst community.
And then look at revisions though. Go up and go to earnings revisions.
Yeah. Well, I would expect they'd continue to revise upward as they outperform. Jensen's pretty amazing.
Look at that. So who cares about their freaking predictions because they're wrong and they've always had to revise upward? Like,
no, but it gives you a baseline.
Well,
it gives you a baseline that they're conservative.
If they were predicting 100% year-over-year growth next year, that's pretty extreme. And I would have some concerns with that. But no, they're the 50%, like on Nvidia, they're going to beat that almost certainly, barring something really weird happening. So it is about expectations at this point. So,
and then
keep in mind, this is the low end. The high end for next year is 270 billion for revenue.
And then so okay, total addressable market investor here. What's the TAM for all of these tech companies that are getting into, all these naturally language processed AI models? And then what is this total addressable market for all of these auto manufacturers that are going to get into self-driving models? And NVIDIA Drive is the number one, service for them to start using.
Further, what happens with freaking robots,
autonomous robots, and NVIDIA being the number
AI
one
into the robot brain?
But
exactly.
So I agree with all of this, guys, and the numbers do look very interesting. The assumption that we're making here, I'm just trying to play devil's advocate, is that NVIDIA is still going to be NVIDIA has a foothold in the market right now because it's cornered the market in terms of the chips that they're making. I don't necessarily know that that's going to be the case.
CUDA has cornered the market. That's the problem. Kids are coming out of school knowing the language model that Nvidia has created. So everyone in these organizations are wanting Nvidia, and they're telling their companies, hey, get Nvidia. Not only do they have the best chips, but they have the best software. And so it's not, and it's exclusive to the Nvidia chip. So they are required to upgrade through Nvidia because that's how people know how to use AI.
And they are becoming slowly a software subscription company on top for recurring revenue.
Absolutely.
Because all the products that they are selling to their customers need the software to run.
Everything is built on CUDA. Stuff to watch. This is 100%. That's the part that people don't. It's not like, oh, if a new chip comes out, then people are going to switch. They can't.
So, okay, but what's AMD's plan? How are they planning to tackle this? Because there has to be something. You can't just be like, this is a slam dunk. It's absolutely going to go to the moon. Like, there has to be some other. I'm just trying to
offer their own solution.
Too far behind right now.
Offer their own solution and a better chip if they can. But honestly, it's probably pricing. It's probably.
This is not me saying it. Share my screen one more time. This isn't me saying it. This is Amazon executives saying. Read that headline.
Yeah. No, it's honestly, I'm still super bullish on Nvidia. I think that they have a great plan here. And the thing that I like is like, it's not a bet on just AI. It's a bet on all the next technological advances going forward.
Amazon is too, though. I think that there's.
I'm not talking about Amazon. Like that's.
I think there's more reward with Nvidia, but there's more risk too.
Sure. I would agree with that. Look, Amazon has a moat that's not going to be penetrated on e-commerce, and AWS is still going to continue to grow most likely. Both are going to do well. I just think there's more upside over the next year or two with freaking how about he was 2 years too early? You guys have no idea. But Nvidia has a lot of upside, I think.
Yeah.
It's the largest position in my portfolio.
Should have bought it in 2016, apparently. I don't know.
Yeah. And even then, I don't even know if I would have got a better price because I bought after essentially like a 48% drawdown from crypto pricing. So, no, the only thing I did wrong with Nvidia is I did not buy enough, and I also trimmed a lot on the way up. But still, it's still a quarter of my portfolio. And I think that I should maybe buy more.
I mean, I just bought more the other day, this week, on Wednesday, I think.
Yeah, I'm going to give you a call after this, Steve, so that we can talk about it. Because I'm looking for new candidates to run a wheel on. And this.
Well, have you looked at the option premiums on this? They're crazy.
Really?
Dude.
Let me check the option chain. Hold on.
Wait, you don't know?
Oh, he doesn't know? Let's just say that I sold cover calls yesterday for next week on Nvidia, and the premiums were insane.
All right, hold on. I'm checking. Yeah, we can do after hours on a Tinder if you want.
All right.
Is there anything else we have for like Sofi that we want to just like finish up or no?
It's a good company with also a very exciting long-term future.
I mean, they're not that insane.
Well, it freaking sold off today. It is certainly not where I sold it at.
Oh, did it? Okay, so it's down today.
Yeah. Well, so you have to keep in mind, Tevis is used to like IMS premiums on like the most volatile stock in existence. Yes. Apparently, it's ridiculous. Like every single day, it's like if it's up or down like 5%, it's like, oh, it's a pretty calm day for him. It's like, pretty boring, and like it's like 10, 11, 12, 13. It was like, what in the world is going on? So there
is no better feeling because I am so secure in the fact that I want to own more shares. And like I wrote cash secured puts for 28 when it fell to 30. And it was just like printing money because I was like, if this goes to 27, 26, like I'll do more for 25. And I'm happy to own those shares, more than happy. But just to put your neck on the line, you're collecting so much premium. I think I collected like 2%. just for the week. It's
That's
great.
interesting.
All right, ladies and gentlemen, thank you all so much for watching. We really do appreciate your time. Please, everyone puts in a lot of good effort on this show, so check them out on X or on YouTube, depending on where they are. I think only Steve is the last remaining person without a YouTube channel, but you can follow him on X, but especially on Seeking Alpha. You can see all those ats down below. Thank you all so much for watching. Really do appreciate your time. Bye for now.